Hello everyone. So today we are going to learn how to understand a candlestick pattern. This pattern is usually seen in the trading chart which we see during the trading of stocks. So let's get started. First of all, we see two candlesticks in the trading chart. One is green and one is red. The green candlestick is formed when a market has a positive sentiments and the red one is formed when the market has negative sentiments. Green candle is found when the opening price of the share or the market is lesser than the closing price, and red candlestick is formed when the opening price is less than the closing price, which means the market is in loss. As we can see in the figure, um, as we can see in the figure in the green candlestick, this place is the opening shows the opening price of the market or the stock you want to choose, and this part shows the closing price, and similarly it is exactly opposite in the case of the red candlestick. Okay, and once again, here we have the figures of the candlestick. So this part which we can see in the middle part which we can see is called the body of the candlestick. This is the body, and this tail like thing which you can see in the top and bottom of both of the candlestick is called a shadow. In this case, let's take the example of the green candlestick. Suppose a stock opens at the price of 100 and it reaches maximum to the price of 125, and due to the buying and selling pressure it decreases to 95 and then finally gets closed in 110. So this is what it signifies. So thank you for watching the video. If you enjoyed it, then please drop a comment, like the video, and subscribe to the channel. And I will surely be bringing better videos in the upcoming future.